Good morning and welcome to the VSA Capital 5-Minute Morning Miner on Monday, the 7th of February. So we have China all back at work after their lunar holiday. And I think that's probably going to help commodity prices stay strong. There's 1 week to go till Valentine's Day. Don't forget to go and buy a card this week so that you don't get into trouble. And Paul, how are you this morning?
I'm quite well, thank you. How are you?
Yeah, not too bad. It's Monday morning. It wasn't a bad weekend, although England blew it against Scotland. But if you're a Scottish person, then you're probably quite happy. But there you go.
Yeah, and they beat the USA in curling overnight too, so at the Olympics.
Well, that was Team GB beat a combination of England and Scotland and Wales.
Yeah,
but not Northern Ireland. It's always very confusing, I think, for international people, the difference between the UK and Great Britain.
That's right. Yeah, you don't know exactly who's getting represented each time.
Correct. Anyway, let's turn to the mining news this morning. Let's start off. Iconic Rare Earths, that is the Shanghai Mining Club, which is an affiliate company of VSA Capital, has got some news out today, hasn't it?
Yes, they do. Release of Tranche 5 assay results from their Uganda Rare Earths clay project. This representing 110 holes, and the thing is every hole, all 110 holes had rare earths mineralization above cutoff grades as represented in the assays. So we're talking about thicknesses pretty routinely here of 5 to 15 meters at grades over 1,000 ppm in total rare earths, which is just a wonderful consistency of mineralization that we're seeing in these holes. And just have to say they have another 66 holes, they say, outstanding yet at the lab to report. But if they're anywhere close to this good, this is definitely encouraging.
You love a good assay result, Paul. You get
yes, I do.
Now, I'm also slightly intrigued by something you've been saying, which is you spotted Piedmont Lithium, didn't you, the back end of last week, talking about doubling its lithium hydroxide production. And your theory is that in order to do that, they've got to play with another Shanghai Mining Club client of ours, Atlantic Lithium, to get to those sort of levels. Just explain that, Paul.
Yes, they had announced or Piedmont had announced on Thursday, that's NASDAQ listed developer of lithium pegmatite in the United States. They have announced that besides the 30,000 tons per year of lithium hydroxide production for their Carolina lithium project, they want to double that yet again with a second plant and a site to be determined such that they would have a capacity for 60,000 tons per year. Now, the issue is that there are some permitting delays already encountered with the Carolina project, and they do have a Quebec project as well that's not quite as far along. But if they're going to meet this kind of target dates that they were looking for by mid-decade here for this 60,000 tons of capacity, that does mean that the joint venture they have on the third project, which is the Ewoyaa pegmatite project with Atlantic Lithium in Ghana, that feasibility study does have to be completed by this year in order to get the construction on the mine underway such that it's supplying toward this new plant capacity by the middle of the decade. So it's Piedmont is being very aggressive here on the timing, but it also indicates that they're very keen that all three other projects, and specifically the one with Atlantic Lithium, fulfills the role that it needs to.
I mean, Atlantic Lithium now at 38p. It's actually up 36% year to date. There aren't many stocks that are up like that year to date, so it is proving to be a real winner. But that's interesting news. I mean, whilst on lithium also, so much of the lithium in the world is controlled by the Chinese, and Xijin Mining are putting more money, aren't they, down into Argentina to build a lithium carbonate plant down there. And that's going to have quite an impact on the whole South American lithium mining scene, isn't it?
Yes, it is, and that's just a demonstration too that the Chinese are pretty keen in order to control the raw material supply chain around the battery materials and specifically around lithium as much as they can. The fact that they're moving some of this upstream chemical processing plant capacity into Latin America in itself, rather than just bringing concentrates or brines back into China for processing. And it also is a follow-on support for the automaker BYD, which had opened a battery plant in Brazil just in September of last year. So there's definitely some consolidation of the supply chain going on in Latin America.
I mean, you've got consolidation, you've got the Chinese everywhere, and of course you've got potential of nationalization all over the place, and also restrictions on the amount of lithium being taken out potentially, because they are a little bit worried, aren't they, that it's too much is taken out too quickly.
Yes.
Does that worry you, Paul, about the whole sort of lithium? There's a lot of interesting lithium plays down in South America, combination of all the various countries. How worried are you about all of those factors altogether?
I have to say I'm not terribly worried about it. I'm more concerned about the fact that the governments around the world have been essentially moving too slowly in order to get policy in place to get things moving as fast as this needs to take place if the climate targets are to be reached. So it's not the availability of the lithium itself, it's the government policy in order to make sure it happens.
Okay. All right. Well, what else would you like to mention this morning in the news, Paul?
Just in follow on this Zijin story, it's also interesting too because Zijin itself is not really a battery chemical company; it's a gold producer. So it is also supported by the news out by Gazprom, Russia's Gazprom today, that they're going to extract lithium from oil field brine in one of their large oil fields in Russia. But the important thing to demonstrate there too is that if we still need new oil and gas fields to continue to be developed, and the reason being these wastewater brines from these fields do have usable chemicals in them like lithium. And the other thing is the reduction in pressure of these oil fields is such that you can pump the CO2 that we need to otherwise take out of the air and sequester from our industrial activity. We can pump that back down. So these are very useful, but we do need to allow oil and gas development to continue.
I mean, it comes again. It's the whole lithium market, should we say, is rapidly transforming to a certain extent from what it used to be. As demand for lithium grows and the price increases, all these different ways of sourcing lithium suddenly come to light. I mean, you sometimes wonder: is there a shortage of lithium, or is there not a shortage of lithium? That is the question, and that was not a bit of Shakespeare.
And this geologist says there's not the shortage of lithium, the element, there's a shortage of lithium to be delivered into the marketplace.
And I think that is the answer. On that note, Paul, we've probably talked long enough, unless you've got something bursting to tell us. I'm sure there'll be plenty more news as we come on during the week. Thank you.
Very good. See you then.